Okay, so today we'll be discussing manufacturing account. Manufacturing account is an account that is used by manufacturing companies. This account is in addition to the trading and profit and loss account and the balance sheet. This is one additional account to the other two types of accounts in your financials for a company. The manufacturing account is prepared to show the production cost of making the goods. I want to repeat that. The manufacturing account is prepared to show the production of making goods. If we look at the notes that is before us, it says a business that manufactures all or some of the goods they sell start off with a manufacturing account, which shows the cost of goods produced or cost of production, which is transferred to the trading account in order to calculate the goods sold. So, for example, a manufacturing company is Carib. Carib actually makes their own drinks. So, what they do is their drinks go through a process to manufacture or to produce the final product. Let's take Colgate, the toothpaste. The toothpaste don't just appear like it grew on a tree. No, different ingredients has to come together, be manufactured into the final toothpaste that we use on a daily basis. So those are manufacturing companies. The next discussion is, okay, fine, what types of costs makes up, your manufacturing account? And in there, we have direct costs and indirect costs. Direct costs are those that are directly traced to the manufacturing of the product, versus indirect costs, which cannot be directly traced to the product. So direct costs includes direct materials, direct labor, and direct expenses. So let's look, for example, let's talk about chow. We're in the business of selling chow. You know those preservatives that have been sold in the groceries? Let's look at that, for example. What would be the raw materials to make that chow? Hello?
The like if you're using either the mango or pomsity or whatever fruit you're using to make it, and like the salt or seasonings and whatnot.
Perfect. So the fruit, the fruit, the pepper, the seasoning, salt, all of those things are the ingredients. And those are considered as your raw materials. Raw materials is considered stock in a manufacturing firm. Stock in a manufacturing firm, there are three different types. And raw materials, which is a direct cost, is associated or is known as stock, right? So the raw materials. Then another direct cost, or as we know it to be, we have the work in progress. When you hear the word work in progress, what would you think work in progress is? Using the same example of the chow.
Like the process through which from where they use the like the mango and the salt and whatnot, and they making it together to have the product.
Yes, very good. So the work in progress is also known as a partially finished good. So, there are some persons, when they make chow, they will know you have all the ingredients cut up in a bowl along with the fruit. But before they consume it or before they sell it, they will actually let it sit or rest or cure or preserve for 48 hours or 72 hours or 7 days, that process, that waiting period, is work in progress because it's not ready to be sold, but it's also not raw materials anymore. It is the product, but it's not the finished product. It is the product, but it's not the untouched product. So it's in the middle of the cycle of the product. So that is known as work in progress. Then, when that period is finished and it's packaged and ready to go out to the consumer, that final product is called the finished goods. So raw materials, work in progress, and finished goods, these are 3 different stages of the product. At the end of the day, raw materials, work in progress, and finished goods are all considered stock. There are 3 different types of stock, but they all still fall under the banner stock. All right? So back to the direct costs. As we know, the direct costs in the same chow will be the direct materials, right? The direct costs associated with it. So that's direct materials. What would be the direct labor in the chow process? Whose labor would be the direct, would be considered direct? Samir?
I think the person who making it.
Perfect. So the person who's making it, right? The different persons, you know, cutting it up. The next one might do the blending of the seasoning. The other person might, you know, one person might put all the ingredients together. Another person's responsibility might be to cure it. Another person's responsibility might be to package it. You know, all of those direct employees, their salaries are considered the direct labor. Direct expenses. Can you give me an example of direct expenses?
I don't know how to say, but probably like the salaries maybe.
The salaries is the direct labor.
But
So
like
an example of the direct expenses would be like the plastic bag to put it in, the packaging. It could also mean the electricity directly used in the process, if any. So those type of costs that are direct for the product, they are considered direct costs, and direct cost forms part of the manufacturing cost. The other element of manufacturing cost is indirect costs, and indirect cost is also known as overhead expenses. These are the ones that basically kind of remain the same. So for example, you would have rent for the place, that's indirect. You might have the different equipment, that's indirect. You might have cleaning staff, you might have the delivery driver, all these different things. They are indirect costs. So let's look at the note before us. These direct costs, these costs are directly related to the volume of production. They vary according to the number of units produced. If production increases, direct cost increases. And if production reduces, then all the direct costs also reduces. So perfect example again. Let's use the chow again. You made chow to sell in your class. Your class has 20 students. So you made 20 bags of chow. And within 1 hour, all of your bags of chow were sold. All were sold out. Then next day, go to school with another 20 bags. However, the children from the other classes happened to hear about it or taste it from their friends, and they too came in and started to swarm around you and say, hey, Samir, I need a bag of chow. So now you have 40 or 50 students wanting to purchase these 20 bags of chow. So it means, what it means now, that one, your demand is high, but your supply is low. So you know what you have to do in the third day of school. You'll have to make more bags of chow to carry. Isn't that so?
Yeah.
Right. So your grocery bill is going to go up. So you're going to buy more market.
You have
You're
to
going to
buy
buy
more, yeah, like the salt, you have to buy more salt and
yes, you have to buy more seasoning. What else
seasoning
again you
and
have to get more of? And more fruits.
plastic bags and
Exactly, exactly. So that means your direct cost is increasing because you are producing more bags of chow. You're manufacturing more bags of chow. Let's say now the COVID come and hit the situation here. And now from your big 100 bags, because you know, your business grow from 20 bags to 100 bags. Less people are out, less students are out. If you produced the 100 bags, would you have gotten or sold in a season like this?
no.
No, correct. So what will have to happen is you will have to now reduce the amount of bags of chow that you are making. So you're going to manufacture less. You're going to produce less. So this example that I gave you explains what is in note, what is entailed in the note. Because the note says if production increases, direct cost increases. If production falls, direct cost falls. Do you have any questions here?
Not as of not as right now I have any question.
Okay. Hi, Jaden.
Hi, miss.
Hello. Hi.
Yeah, I didn't think anybody was in class now.
Okay. We are discussing manufacturing account, and we just covered direct costs, and direct costs are the costs that are directly associated with the product. And we were using, for example, someone who's making chow to sell and the different direct costs that they will have. And for example, the direct cost for chow will be the fruit, the seasoning, the pepper, the salt. Those ingredients would be the direct costs. And then we spoke about the direct wages would be the salaries of those who are actually making the chow. You know, the one who's mixing it, the one who's peeling the fruit, the one who's blending the seasoning, those different persons, because their hands are directly involved, they will be considered direct wages.
Yeah.
Then we have direct expenses, which will be the electricity that you may use to, you know, the blender, whatever have you. Those, that will be direct expenses.
All right.
The total of your direct costs, which are 3 types of direct costs, which is direct materials, direct labor, direct expenses. It is known as prime costs. So please note that.
All right.
This screen has it here. These 3 types of costs, direct labor, direct materials, direct expenses, they are all known as prime costs. Prime costs added to your indirect costs, it is now called production costs. Are you all seeing this screen that I have up?
Yeah, miss.
Right. So the prime cost add the indirect cost is known as production costs. And I get an example of indirect costs in this one here, we're talking about with the person who's selling the chow, might be the rent. That's an indirect cost. Then you might hire a cleaner. The cleaner won't just clean the kitchen. The cleaner might clean the porch. The cleaner might clean outdoor where the customers are coming. So that cleaner salary will be an indirect cost. So prime cost, which is made up of your 3 direct costs, add your indirect costs or your overheads, it is known as production cost. Then we're going to add that now to your administrative expenses and your selling and distribution expenses. When you add your production costs to those 2 expenses, you now have your total costs. Let's talk about your administrative expenses, guys. What type of expenses fall under the banner administrative expenses? Both of you, throw out ideas to me. Whether it's wrong or right, it's okay, we will discuss it.
Yes, I'm not too sure about that one.
Jayden, what do you think? Want to give it a shot?
I say I don't want to, but I scared I put the wrong thing.
That's okay. Let me give you an example. Administrative expenses. These are like persons who are further away from the product. In other words, so let's look at it like a circle. You have an inner circle, the outer circle, and they keep going out in circles, right? The first circle is those who make any product. Then the circle around that is a cleaner, the person who are clean around, that and the overhead costs, the rent and those things. Then further outside of that, you will now have your accountant because, hey, you need to hire an accountant to do the bookkeeping for you, right? You might want to order some paper to print your receipts on. You will want to, you'll have bank charges. You might have office equipment like a laptop and all those things, the depreciation costs on those things. Those are considered administrative expenses. Then further outside of that now, you have your selling and distribution expenses. So this one, can you tell me what are some selling and distribution expenses costs? Anybody? All right, guys. I will go with that. Your sales team, the people who actually going and selling those bags on, those bags of chow, your sales team, their salary will go under selling and distribution. If you give them a commission, if you tell them, hey, if you sell 10 bags, they get $1 on every 10 bags. That commission is also selling and distribution. If you have vehicles for selling, who driving around and saying, this one that comes to my mind, selling scrap iron and old battery buying. You might have a mic man going around driving and say, selling chow, anybody buying. All of those types of costs to sell the product, any cost directly associated selling the product or distributing the product, those are known as selling and distribution expenses. Any questions up to here?
No, so that is kind of like how this sometimes like the people kind of like on the side I do sometimes selling like the bread and things sometimes.
Yes, the Quelo bread. Yes. Their salary, their uniform, the distribution to them is going to fall under selling and distribution expenses. Perfect example. Very good. Any, Jayden, you want to add anything to this?
No.
All right, great. So now we're going to look at the format for your manufacturing account. So, like I mentioned, we have direct materials and direct labor and direct expenses. Those 3 will give us the prime cost. Then you add that to your indirect manufacturing costs, and you will get your production cost for the period. Production cost for the period, then added to your selling and distribution, it will give you a total cost for the product. Okay, guys? So let's go back to this.
So about the one you had sent with the
I'm not opening it up here.
Oh.
Yeah, I'm looking at it. I'm gonna open it up here for you as well. Lovely. So the other screen there, this here is just a minute. This is a minimum screen, a very small one, small replica of the manufacturing account. And on this note here is a much more detailed one. So let's look at it. Remember, as I mentioned earlier, just for the sake of Jadon, stock is made up of 3 different types of stock. You have raw materials, then you have work in progress, and then you have, what's the other one, Samir? Finished goods.
The what?
The 3 different types of stock. You have raw materials.
Yeah, the raw materials, the work in progress, and the finished goods or services.
Very good. Very good. Now this format, you'll need to learn this format. This format needs to be learned in this order, okay? It's imperative that you learn it in this format. Opening stock, add your purchases, add your carriage inwards, less your return outwards, will give you net purchases of raw materials. Net purchases of raw materials added to your opening stock there will give you cost of raw materials available for use, less closing stock, give you cost of raw materials used. Add your direct labor, direct expenses will give you a prime cost. Then we're going to add our indirect expenses, which is rent, salary, etc. That added to your opening work in progress, added to your prime cost, less your closing work in progress will give you your total cost of production. This is imperative, it's important that you learn this format, okay? After much practice, you will learn it, but another way for you to learn it is if you keep writing it, have a couple of polar pages, and keep writing it over and over, like if you're doing lines. Keep writing it over and over, write it for about 10 times, and I'm certain it will stick in your head, the format. If not, what will also help is if you practice a lot of questions to get this, right? To be able to practice it. So, and this here, the next page now shows us the trading and profit and loss account, which we all already know from previous classes, right? You remember this? Sales, less return outwards give you net sales, less your cost of goods, so we give you cost gross profit, less expenses gives you a net profit. Do you all remember this format?
Yeah.
Right. Yeah. Good. And then your balance sheet remains the same, right? This is how your assets will look. Before, what we have learned under assets in our balance sheet, we would have just had one line for stock, debtors, bank, and cash. For manufacturing companies, they're actually breaking all the stock into the 3 different figures: raw materials, work in progress, and finished goods. So before, we were showing it as one figure, but under a manufacturing company only, when you're doing manufacturing accounts, you split the stock into the 3 different types of stock. But for other questions that are not related to manufacturing accounts, you just put one figure for your stock, which is a closing stock figure. All right? I just need to make that clear. We are not changing anything, what we already know. This is what we're learning today. This topic is manufacturing accounts. So it's 2 different types of accounts. As we learn here, we realize manufacturing accounts have one additional type of account, say financials, and that is the manufacturing account itself. Good. So let's attempt a question together and see, and let's plug in the information that we have according to the format, and let's see if we understand it. Do we have any questions up to this point? Guys?
Miss Rizza?
Do you have any questions up to this point?
No.
All right, so we're going to now attempt a question. I'm going to pause the slide now.
Yeah, okay.
Pause the recording, sorry. So manufacturing accounts, as we know, after those questions that we attempted, once, like I say, once we follow the format, it will be easy for us to complete. And when a firm, I just want to recap this, when a firm makes goods, rather than buying them, so they're actually making a product to sell. Like for example, we had used Colgate in the beginning, we used Carib, even a clothing, not a clothing store, but the people who actually make the clothes to sell, those like Chinese companies. Yes, very good. Their cost of production to produce the item goes under the manufacturing account. This manufacturing account needs to be done before you start your P&L account and your balance sheet. The cost of producing an item is made up of 3 items. What are these 3 items known as? What are these 3 items known as again? The direct costs, what are the direct costs? Direct materials, direct labor, and direct expenses. And these are known as what? Anybody? Samir? Jayden? Guys? You all left the chat? Hello?
Miss, I wasn't. Yeah, Miss, you there?
Yes, I'm here.
Oh, I wasn't here.
Yeah.
I said the cost of producing an item is made up of 3 items, 3 direct items. What are they?
The raw materials. That's one of them.
Direct materials, direct labor, and direct expenses. And they are known as the prime cost. The prime cost is added to the indirect cost or factory overheads. And that is now called our production costs. Our production costs added to our administrative and selling expenses will be known as a total cost. Direct costs, once again, are those costs that can be traced to the item from the item that is being manufactured, whereas your indirect manufacturing costs or your overheads or your factory costs, those are the costs that relate to the manufacture of the item, the production of the item that we're making, but it cannot be easily traced to the product itself. So like that is cleaners and so forth. Where an organization manufactures its own goods, the financial statement, as I mentioned earlier, must include the manufacturing account. Everything else remains the same what we learned prior, which is the trading and profit and loss and the balance sheet accounts. You must adjust your manufacturing account for any work in progress at the start and at the end of the product, the account. So remember, I had mentioned in our earlier notes that stock, there are 3 types of stock: raw materials, work in progress, and what's the next one again?
The finished goods or services.
Very good, finished goods. But only 2 of those stock is shown in our manufacturing account. What are those 2 types of stock that we use in our manufacturing account? Raw materials and work in progress.
Yeah.
Correct. So there are 3 types of stock: raw materials, work in progress, and finished goods. Work in progress and raw materials, we use those figures in our manufacturing accounts. Finished goods is used in our profit and loss account. Okay, that is very important. So that's it for today for manufacturing accounts. Like I mentioned, we had there are 6 past paper questions. We did 2 already in class. The other 4 is for homework. When you finish your homework, please, as soon as you finish one question, send the other
Okay.
for me, okay? To correct before you go on.